then maybe what you can do is look into, again, not investing advice, but maybe look into making small deposits into Bitcoin on a regular basis, and look at this as like a 5 to 10 year strategy. Look at this as something that you're just going to do for the next 5 years. I would not look at it as, okay, I'm going to do this until something dramatic happens and then I'm going to get out. If you decide it's going to be a long term strategy, one of the best ways to invest is to pick your strategy and just stick with it. Just like I married my wife, I pick my wife and I pick her on the good days. I pick her on the bad days. Every day I choose my wife. I can't choose my wife on Tuesday and then not choose her on Friday and then choose her again the following Monday. No, I have to choose her all the time, every day. That's the strategy I selected. And, like any other strategy, some days you're like, oh gosh, I don't know if this is working the way I thought it was going to work. But long term, you should see those benefits. So I think that Bitcoin, in my opinion, that's a strategy I know that I'm choosing. And again, not me telling you what to do, but I think that there's a lot of potential in Bitcoin. I think there's a lot of opportunity with crypto, but not everybody feels that way. I know that Jamie Dimon, who's a super smart guy with JP Morgan Chase, he seems to not like Bitcoin. He seems to think, I think when they asked him about it on MSNBC, he said, stop talking about that shit or something like that, which was kind of surprising to hear him say that. I don't agree. And I don't think he agrees with what he's saying. I just don't believe it. I don't believe that he thinks Bitcoin doesn't have a chance. I think that there's something else going on there. I think that maybe he has some relationships with government officials or something that's making him really, really dark on Bitcoin. Because I think that there's a lot of potential there, but there are risks. So remember this too. When you talk about a good investment versus a bad investment, that does not mean that there isn't risk. It's like when you were watching the football games last week, just because the 49ers, beat the Packers, that doesn't mean we know the 49ers were a better team. We know the 49ers are supposed to beat the Packers, but they almost didn't beat the Packers, right? The Packers almost beat the 49ers. So it could have gone either way. So don't assume that because you're making the right decision that it's always going to work out for you, right? And when it doesn't work out for you, don't assume that that means that your initial reaction or your initial thought was wrong. Like, so if I'd bet money on the 49ers, looking at all the statistics, knowing that they were a better team and the 49ers didn't win, that doesn't mean that I made a bad bet. That just means it was a good bet, maybe based on the averages, but it had a bad outcome. You understand? So sometimes when you make an investment in a stock, it's a good investment that just doesn't go quite the way you thought it was going to go. It doesn't happen the way that you thought it would. Okay, so let me read a little bit more about Bitcoin and put your question in the Q&A section if you have a question. Let's see here. So going deeper into this, they said traders are sitting on large unrealized profits, and analysts say Bitcoin's price has a long way to fall before reversing higher. So they believe it's going to keep going down in the short term. In the near term, they said 36,000. That's the support level to watch. That's technical analysis, which technical analysis, by the way, is very questionable. I know a lot of researchers who don't believe in technical analysis at all. I think that they're somewhat wrong, but also think that anybody who thinks technical analysis is always correct, they're going to be wrong too. Let's see here. The move in Bitcoin continued to pull the crypto market lower. So if you are a crypto believer, this might be a good time to buy. Crypto related equities were under pressure. MicroStrategy has been hit. Marathon Digital. If you guys are in Prime, you know that Marathon Digital is one of the companies I love for selling stock options. These are if you're not sure how to do this sort of thing, you can text the word stock to 87948, and I'll send you a training on how to make money without working. It's also on my website, boycewatkins.com, if you want to go there. So text the word stock to 87948 and I can send you some information on that. Okay, so let's look at some other things. I heard a report this morning about Disney as well. And Disney's interesting because Disney is a company that I used to really like. I used to believe deeply in Disney. I used to think Disney was going to just be just a great moneymaker. But Disney has done a horrible, horrible service to its investors over the last several years. It's the stock has literally almost become an embarrassment in the sense that they just they're from a managerial standpoint, they just don't seem like they know what they're doing right now. And also they're sort of caught in a box as it pertains to their ability to make a profit. Streaming, which used to seem like a blessing for Disney, has now become a curse. So there's a lot of belief and a lot of argument that Disney will never figure out this streaming thing and that it could be very messy for them long term. Would I invest in Disney stock? The answer is hell no. I would not invest in Disney. But if Disney stock continues to drop, then maybe that might be an opportunity. I'll keep you guys posted on that. I'm going to keep watching Disney. Now, if you want to know the stock that I like, I forgot to mention this to you. It's Verizon. Verizon is a stock that I'm going to buy some shares in today. Again, nothing's guaranteed, but Verizon is a stock that I believe in. That I believe is has a lot of upside to it. T-Mobile, just to give you another one, that's another one that I think could do quite well. So these are stocks that I personally plan to buy once we're out of here. Once we get done for today. All right, so give me 1 second here as we kind of jump in, and I guess. And by the way, if you guys want to join us for our financial consciousness training, you can go to drboyceelevate.com, and everything from the training that we've done over the last we've done 23 days. We're going to do 30 straight days of financial consciousness. So if you'd like to join us, just go to drboyceelevate.com, and you can participate in that. I think you're going to like it. I think and those of you that are in the class, say something so others will know that it's a lot of fun, and I think you guys are going to enjoy it. And also, if you go to drboyceelevate.com, you can have all the recordings, everything's there, and you can share it with your family. And the goal is really to talk about financial consciousness from a standpoint of understanding what it means to be financially aware. You know, um a lot of what um a lot of what causes people to have financial problems is a lack of awareness of what's going on. You know, really in this in capitalism, you have conscious consumers and unconscious consumers. You have conscious investors, unconscious investors. And it's almost like when you're looking at the world where money is circulating and people are building wealth and all this other stuff, it's like a world that doesn't exist for some people. It's almost like if I live in the west side of Chicago, I'm not even conscious at all of all the things that are happening downtown, right? That's why you have some kids that grow up on the west side of Chicago who've never been downtown at all in their whole entire life. And that really that lack of awareness, that lack of knowledge sort of reflects a lack of consciousness, a lack of understanding of what's actually happening there. So I would almost argue that financially, the same thing is kind of true. A lot of times, our financial consciousness is limited by just maybe not a lot of financial literacy training growing up. A culture that focuses on other things other than money. Like if I'm focused on football, maybe I'm not thinking about what's happening in ballet, right? I don't know anything about the ballet industry because I'm thinking about football. And so basically, financial consciousness training was something that I came up with in terms of something that I think could benefit us because, generally speaking, if you're simply consciously choosing to become aware of certain things and how they work, you're gonna have some insights you might not normally have. So, as a parent, for example, there are times where the way I connected with our kids, because I'm their bonus dad. My wife had 3 kids when we got married, and I love them all. Um, I connected with the kids by becoming very conscious of them. I would sort of observe their behavior. I watched what they were interested in. I got to know their patterns and their temperaments, what they spent time doing every day, and that gave me opportunities to connect with them in meaningful ways. And so, with each of the kids, I have a strong connection because I became conscious. I took the time to become aware of who they are, what matters to them, what they do every day, how they think, what they believe, all that stuff. So when I think about financial consciousness, I want you to think of it as just sort of the fact that the more you think about something, the more insights you're going to have into that thing. Like I could walk past a wall every day, but if I never take a moment to stare at that wall, imagine one day I just stop and I say, "Let me look at this wall. Let me see here," and I'm looking at it carefully. And I'm just staring at it for about 30 minutes. I'm going to become very conscious of it. I'm going to notice cracks in the wall. I might notice stains in the wall. I'm going to notice all these other things I never would have noticed if I was walking right past the wall. So I'm going to say to you this. Here's my point. I believe that a lot of us miss out on money because we just walk right past it. We're not aware of it. We can't see it. Um, Entrepreneurs, for example, have a level of economic consciousness that other people don't. Like someone who's a good entrepreneur can walk into a room and see money, even if there is no money in the room. If even no one has any cash in their pocket, they can see the wealth. They can see the money in that situation. Or so consciousness generally starts with a type of awareness where I can see things in the moment that other people can't see. I can see things in the future. I can see things in the past. I can see things in a higher dimension. I can not just see the past, present, and future, but I can also see not just the future that's going to occur, but all the alternative futures that could occur if I pivot or if I make an adjustment or if I change something, right? So I would argue to you that if you really want to build wealth in your family. If you want your kids to have wealth, give them economic consciousness. It starts with some basic things like having conversations about economics on a regular basis. Like, for example, I think we're very conscious about hip hop and what our favorite celebrities are doing because that's what we talk about. People will go to Instagram and they'll follow along with storylines like, whatever 50 Cent is doing with his baby's mama and stuff like that. People do that type of stuff. I'm saying that I think an economic consciousness could be beneficial to you if you're seeking to be a wealth builder, and there's a lot of ways to kind of do that. So anyway, if you go to drboyceelevate.com, you can take a look and see what we've been doing. I did not know how it was going to go, but it's going extremely well, and I have no doubt in my mind that it will increase your family's generational wealth dramatically because there's so many angles of economics, so many different ways that our choices affect our money that we're not even aware of. Like we don't even understand the connection between money and family. Broken black families cost the black community trillions of dollars every generation. Uh, Bad relationships, dating the wrong person can affect your economics. How you take care of your health affects your economics. The career choices that you make affect your economics. Like one thing that I do with our kids to make them financially conscious is we don't even talk about careers in our house. We don't even talk about having a career. I've never talked to them and said, this is what your career should be. I said, because career, maybe the word career is something that made sense in 1982. It doesn't make sense now. I said, you can be whatever you want. I said, all you got to do is make sure you can raise four or $5,000 a month at least to pay your bills, and then you can be whatever you want. And so rather than telling you to pick a career where you are narrowly defined as a person who exists within one profession, I said, I want you to do anything that fulfills you and just think about how these things all connect so you can do all these things. Like if you ask me, like, what is your profession? I couldn't tell you what my profession is. I can tell you, yeah, I am a professor. I do have a PhD. But some days I'm an author, some days I'm a content creator, some days I'm a filmmaker, some days I'm just a husband. So I'm just Boyce. That's it. Right. And so generally speaking, I would say economic awareness kind of allows you to sort of see the world in that way, as opposed to constraining yourself in ways that are either going to leave you unhappy or leave you broke. So my biggest recommendation to you is heighten your financial consciousness. Heighten your financial consciousness. The more awareness you have when it comes to money, the more money you will generally have. People who are not financially conscious but somehow think they're supposed to have all this money, that doesn't make any sense. Like if I'm not conscious of football, how in the hell am I going to be a football player? How am I going to win a Super Bowl when I don't even know what's going on in the game? I don't even know how to get in the game. I don't know how to play the game. I don't know what equipment to wear. I don't know what the rules are or whatever. That doesn't make any sense. So in order for me to make money as a football player, I'm going to have to become conscious of football. I'm going to start thinking about these things. All right. So anyway, let me hop back in and answer some of your questions. Now, to remind you, the two stocks that I like right now are Verizon and T-Mobile. I'm going to buy shares in both of those companies right after we're done. I think I already own some Verizon. I don't own any T-Mobile, but I'm going to buy some more of that. And there's just reasons that the wireless carriers are expected to grow. Some of it links actually to the movement away from broadband cable. Apparently, they're starting to sell these little boxes that are cheaper than broadband cable, and you can put these boxes in your house that might come from T-Mobile or Verizon, where you can have this 5G Wi-Fi going all through your house. And so that might be something to consider. But there are a variety of reasons. But Verizon and T-Mobile, two long-term investments I'm going to invest in. Is education and training still important? Yeah, education and training is very important. But here's the thing: if I'm trained on something and I'm not conscious of it and have an awareness of it and develop instincts around that thing, I'm not going to be very good at it. So let me explain. What if I talked to my buddy who's a rapper? His name is D1. D1 is a great guy. He's teaching at Tufts University right now. And also he's just been really taking on the entire hip hop music industry for some of the buffoonery that they put out to our community, or not to our community. They're not selling it to us. They're selling it to mostly non-black people, but it represents us. It makes us look crazy and bad and evil and stupid and everything else. So anyway, so that's why I love D. I love the fact that he took that battle on, and so D is teaching a class at Tufts, just like the one he taught at Harvard, which is basically about hip hop culture and hip hop and I think it's cultural influence, social influence, stuff like that, and activism. Well, if I was to talk to D and said, "Hey man, I want to be a rapper. I want you to teach a class called How to Be a Rapper, and I'm going to take your class on how to be a rapper." Do you think that's going to make me a rapper? Like if I take, let's say I go to the class, I take notes, I show up Monday, Wednesday, Friday for a whole semester, and then the semester's done, do you think I'll be able to go in the studio and make a hit album? What do y'all think? Do you think I'll be would that make me a rapper? Yes or no? What do y'all think? Answer me in the chat. Well, the short answer is no. I would not be a rapper just because I took a class called How to Rap, right? I wouldn't be a rapper. Well, why wouldn't I be a rapper? Well, because I jumped in and I took this class on a conscious level, but I did not gain true consciousness and true connection to hip hop culture. Right? Hip hop isn't just you know like a blueprint on how to rap. Hip hop is it's a way of life. It's a way of thinking. It's a way of dressing. It's a way people talk. Like you can tell when somebody's in hip hop culture. It might be how they look at other people. It might be how they dance. It might be how they talk about things. Like if you go to an Earn Your Leisure event, they're connected deeply to hip hop culture. So if you go there, there's going to be hip hop culture kind of everywhere. Even the way they talk about something related to economics, they're going to talk about it in a way that is very hip hop, right? And there's nothing wrong with that, right? It's just a style of communication. So ultimately, what I would say to you guys is that when you're talking about economic awareness, just understand that it's deeper than just I'm going to go take this class, right? Because if you think of it just as I'm going to go take this class or I'm just going to go get this skill, what's going to happen is you're not going to have those intangibles that come from having hundreds, maybe thousands of hours of conversations with other people about that topic, which will alert you to and connect you to on a genuine level the nuances of the thing that you're trying to understand. Right. And so ultimately, I think that the training is very important, but I also think that the consciousness goes deeper than the training. The consciousness goes beyond education. See, there's education and then there's knowledge, right? Knowledge and education may not be the same thing. And then knowledge, beyond knowledge, there's wisdom. And I believe knowledge and wisdom are the things that you get when you gain consciousness. Education is something anybody can get by taking a class. All right, so let's see. Lorraine, does the Robinhood app work in the UK with the same functionality as in the USA? I don't think it does yet, Lorraine. I'm going to look into the UK though when it comes to what apps are used the most. Um, because I want to get an update on that. And so I know a lot of you are from the UK, so I want to see what's out there. Let's see here. Shall I do a Robinhood IRA? Asked Veronica. I don't see why not. I would be careful about putting all my money on one app, especially the Robinhood app. Not that the Robinhood app has shown too many reasons to be concerned. They had one glitch that I didn't like, but I don't put all my money on one app. So if you have already have a lot of your money on a Robinhood app, maybe putting your IRA somewhere else might just be good for diversification purposes. Let's see here. Is the Robinhood Cash card a good thing? I don't know the details of the card. I think it would depend on the interest rates and stuff like that, and I don't know if it's customer specific, um, or if there's sort of a universal interest rate. Let me see here. All right, let's see the Robinhood Cash card interest rate. Um, let's see here. In APY, they said okay, you receive 1.5%. Wait, as of November 15th, the annual percentage yield. Oh, you receive a yield. Okay. Um, but the cash card it's like a credit card, right? Oh, I get it. Okay, so it's a card where you can access your Robinhood money. Is that right? Okay. Yeah, well, I mean, it's probably as good as a lot of savings accounts and stuff like that. I'm not sure though, but maybe you just look at the yield that you receive by parking your cash there and see if it matches up with what you get in your savings account at your bank. And I think having the cash card, if it's one of those cards that lets you draw from your funds in your investment account, then that might be a convenience. The downside though is that if you're tempted to take money out of your investment account, you're kind of messing around with your capital base and so sometimes, like I try to deliberately make it difficult for me to access my capital base because I want my money to sit over there and grow untouched. And so I don't know if I'd want to be able to access the money in my stock account just by grabbing, um, you know, I don't know if I'd want to be able to access the money in my account by just using swiping a card. Let's see. How do you feel about Weight Watchers? I don't like it. That's my whole answer on that. Let's see here. Let's see. What are your thoughts on ASML Holdings, technology company manufacturing semiconductors, chips? Um, you know what, Dorothea? I don't know. Let me look it up. Let's see. Someone's asking what happened to my Instagram account. Yeah, well, sometimes I get extra pro black, extra radical black, and then that has a price on social media. So apparently they took it down. I had 500,000 followers on Instagram and they took it down. But my new if you want to follow me on Instagram, I'm at Dr. Boyce Finance. And it's okay though. It didn't bother me just because I have probably 20 platforms and I don't and again, that diversification rule, I apply it in everything that I do because you never know when something's going to go wrong. So when they took down the Instagram page, I didn't like it, of course, and I wish I could have gotten it back. But I knew from the very beginning the risk of depending on any one platform to allow you to do what you have to do. And so if you're looking to do anything involving involving that involves social media for your business or whatever, biggest advice I give you is don't put everything in one place. And you have your email list, you have your text list, you have you could try Facebook, Instagram, Twitter, all that stuff. I'm on Twitter, Dr. Boyce Watkins, Dr. Boyce Watkins, and the number one if you want to follow me on Twitter. But also I have a bunch of other platforms, and that was deliberately done because I've gone through that before. I had a Facebook page where I quoted Malcolm X. It had 600,000 people on it, and it was very active, very popular. The rapper Young M.A. actually got discovered on that page, and then Facebook just came through and they just eliminated it because I quoted Malcolm X, and I think he used the N word, and their bot said, "Uh oh, there's hate speech. There's hate speech." And they took the page down. What they did was they didn't take it down formally. They suspended it which meant that no one else could see the page but me. So they suspended it and it was under suspension for 2 years. And then one day it just disappeared. And I was annoyed. It made me angry because we put a lot of energy into building that page. But again, because we had backups, that's the thing that saved us. But it reminded me of the importance of really diversifying. Anything that matters to you should apply the principle of diversification to protect that thing that matters to you. Anything that you invest in that's important. Never put all your eggs in one basket. I remember the biggest thing that led me to even develop my own platform was when back in '07, '08. Because if you're honest about race, I think that does get you in trouble sometimes with people that don't necessarily like honest conversations. And I got banned in '07, '08 when Obama was running for president. I was technically banned from CNN and Fox. I don't know if y'all know that or not, but I was banned. And it was because Bill O'Reilly did an ambush on me and kind of attacked me because I had gone after him because he made a joke about lynching Michelle Obama. I don't care if you're white or black or whatever. I'm not gonna let you get away with some nonsense like that because I was worried about this family and what could happen to them. I didn't even. What's crazy is I didn't honestly. I don't. I'm not. I wasn't too big on Obama's presidency every single day. Some things I like, some things I didn't. But I just kind of felt just generally out of decency, it was wrong that these people had to deal with these death threats every day. So Bill O'Reilly made this joke about lynching Michelle Obama. I called him out for that. He got really upset, so he did this ambush, a whole show all about me, but they didn't talk to me. They didn't, but that's what they do. That's what the media does, right? So there's the portrayal. Here's the angry black man. He's a racist, right? He hates white people, which isn't true. But what occurred then was that it became kind of a back and forth with CNN, and then eventually I ended up getting banned from both CNN and Fox, unofficially banned. But whenever my publicist would call them, they would book me and then they would unbook me. Like they would book me and she'd say, "You're going to be on today at 2 o'clock." And then she would call me like an hour or two later and say, "I don't know why they keep canceling you." Right. And so long story short, that really reminded me that okay, instead of investing in this TV thing, let's go build something out here on the internet. This is like '08, '09. So we started developing on the internet because I said we have to have something that's independent. And this is something that I've always said to the black community. This is the point I'm getting at here. If you're black, you really can't depend on pre-existing ecosystems to really allow you to make the progress that you need to make. You can't take the easy route. You can't lean on like, oh yeah, well JP Morgan's going to give us money or this television network is going to give us distribution or this publishing company is going to get our books out there. Because when you really start doing the work at a level that I think the work needs to be done, when you really start talking about the issues that really need to be discussed, you're going to rub some people's feathers the wrong way. Somebody's going to get mad at you. And when they get mad at you and they say, okay, well, we're going to need you to stop. We're going to need you to be quiet or we're going to punish you. You have to have a comeback. You can't just say, well, this is not right. This is racist. This is wrong. You have to understand you're playing a big boy game, a big girl game. And in a big girl game, bad things are going to happen. There was a billionaire that I talked to, a white libertarian billionaire who was checking out our platform, and he was impressed. He liked what we do, and I, and it was an honor. He's a smart guy. He knows people like Mark Zuckerberg and stuff like that. And he said, I like what you're doing for your people. And he said, just understand that when you run up the hill with your gun out, they're gonna shoot back at you, and you have to make sure you're ready to be shot at. They're not gonna just let you come in and take real power. They'll let black people yell and scream and holler about whatever they want, as long as it's not a threat to the system, as long as it's not a threat to the establishment. The minute you become a real threat, and he said you're a threat because you're talking about economics, that's when they're going to sabotage you. So you better make sure you're ready and that you can deal with that. And I said, I am ready, and I agree with you 100%. So that's what I want you to understand, that I think that when you come into this space or you do what you're going to do, just know it's not going to be easy. You're going to have stuff that undermines you, stuff that gets in the way, stuff that blocks, sabotages, doesn't give you the support you deserve. But you can't sit around whining about it. You have to apply some of the principles that we talk about. This is why you diversify. This is why you prepare. So anyway, let me get back to it. Maybe that's why I'm obsessed. I'm actually obsessed. I told you guys I'm obsessed with documentaries about war, because war is interesting, partly because you're going in and you have all your stuff set up and you're all ready to fight, and then your enemy comes in and literally bombs the stuff that you need the most, right? So you spent all this money building this big factory to make missiles and stuff, and they bomb your factory, and then you're like, oh man, now we don't have it. So if your reaction is to just cry about it, then you're not going to last very long. You have to fight crippled. When you have a football team, some of your players are going to have broken bones and everything else, concussions, but you fight injured, right? And I think for black people, I don't know if that's in our culture. I think that we're taught sometimes to just give up and cry and whine about it and say, oh, this isn't right, this isn't fair. Since when did America ever tell you that they were going to be fair to black people? Since what evidence do you ever have that America is going to be fair to you? It's never going to be fair. So anyway, that's my belief. I didn't mean to go off on that tangent, but I hope that this helps you. You got to keep going. You got to keep fighting. One leg, one arm, you just keep going. All right. So Thompson, can you explain what a price earnings ratio is? What is a good PE ratio? Rick, a good PE ratio, price earnings ratio. First of all, let's talk about what that is. Price earnings ratio is where you take the price of the stock, divide by the earnings per share. Now, there's different ways you can measure that, but that's kind of what it is. And what the PE ratio measures is the value of the asset relative to the amount of money that it is making right now. And so a company that has a high price earnings ratio is a company where the price is super high, but the earnings level isn't that high. So that's a company where its value is not coming from money that it's making right now. Its value is coming from money it's expected to make in the future. Do you understand? Right? So if you have a stock that, where they say we made $2 last year, but their price is really big, so their price earnings ratio is really big, that means that investors have given the company a high price despite the fact they haven't made money. So Amazon in the beginning, for example, when Amazon made its first couple of dollars of profit, the PE ratio was very high because people weren't evaluating Amazon for the money it was making now. They were valuing Amazon for the amount of money it's expected to make once the company really gets going, right? So the thing about a PE ratio is that it varies depending on the industry. It varies depending on the types of assets that you're talking about. Young companies that haven't made a lot of money yet tend to have very high PE ratios. Tech companies tend to have very high PE ratios. Companies that tend to have low price earnings ratios tend to be companies that are what they call cash cows. Cash cows are companies where they've already realized a lot of their potential. They're not going to grow very much, but they know how to make some money. So the price if you divide the price by the earnings, it's not going to be a very big number, but these are companies that have already started making their money. So a high PE ratio stock might be like Tiger Woods. Anybody remember when Tiger Woods first got into golf in the 90s? He got this massive deal with Nike. They paid him $100 million to sign with Nike, and everyone said, this is crazy. This guy hasn't even won a single golf tournament, right? So if you measure his PE ratio by the valuation they were putting on him, divide by the results he's received, like earnings would be kind of similar to like his golf earnings. The PE ratio would have been insane because his earnings were low or zero at that point. But what they were doing was they were investing for the future. A low PE ratio asset would be like LeBron James. LeBron James is not a 22-year-old anymore. He's an old guy. He's already done most of what he's going to do in basketball. He's a producer. He's gonna produce for you still, but his best days are probably behind him. But he's still a valuable asset, just in a different way. So that would be a low PE ratio stock. So some companies are old dinosaurs that are like ExxonMobil, Coca-Cola. They don't have high PE ratios. But new companies, small tech companies, what's the one? What is it? The people that own ChatGPT, OpenAI, they don't really have stock. They're kind of connected to Microsoft. So maybe C3.ai might be a better example. C3.ai has a very high PE ratio, right? Because AI is this new, young, emerging industry with all this potential in front of it. All right, so let's see here. How do you set up retirement accounts for retirement cash, etc.? As Timothy and Janae. Um, I would either talk to your bank if you want to talk to a person. Just go to your if you are banking somewhere, just go and ask them that question. Just say, I'd like to set up a retirement account. I'd like to set up, other types of accounts. Banks are good at that. They can give you all kinds of accounts. Another thing you could do is if you wanted to do it yourself and go through one of the online platforms, you can hit the people up on E-Trade and they have customer service. You can just reach out to them and say, I'm trying to figure out how to set up a retirement account, or I'm trying to figure out how to set up an account for, myself or my grandkids or whatever the case may be. And they can help you do that too. So that might be a way to get that done. Just ask for help. I think that would be a good way to kind of get started if you're talking about building multiple accounts, like a trust or stuff like that. Let's see here. Is it true that CEO of JP Morgan Chase is speaking publicly about all the negatives of Bitcoin while privately investing tons of money into Bitcoin? Well, if you believe Blaze TV, Baze and Blaze sounds alike. Blaze TV with Glenn Beck, they did have a guy on there that seemed to support a conspiracy theory that while JP Morgan Chase, and their CEO, Jamie Dimon, was talking crazy about Bitcoin, they were simultaneously acquiring Bitcoin. I have not confirmed this. If it is true, then it certainly feeds into the conspiracy theory. Um, Now, if you'd ask me, do I believe that they are actually doing the things they say they're doing? I don't do. I believe that they're doing things secretly that we won't know about till after the fact. Yeah, I do. So I believe that the game is rigged. I believe there is a real conspiracy, but is this the particular one? I don't know. I don't know what their conspiracy is, but I do know bankers are slick and smart and all this other stuff. And it could be possible that they could be depressing the price by expressing fear, uncertainty, and doubt, and getting the price to dip. And then you buy it when it's cheap, and then when the price goes up, you make money. That's been done before. Market manipulation has been done before. It happens all the time. Elon Musk does it on a regular basis. Donald Trump used to do it. Donald Trump used to drive up the price of his stocks by just buying them because he knew back, and this is 40 years ago. This is how long this guy's been in the game. 40 years ago, Trump knew that if he started buying up shares of a company's stock, people would assume that he was trying to take over the company. This was back during the days where they had a lot of hostile takeovers and stuff like that. So Trump would just he would just go in and start buying and buying and buying and buying and buying. And then when everyone else started buying because they say, "Oh my God, Trump is buying this stock," so they start buying, and the price would go up, up, up because he's buying it. Well, he's making all this money, and then he would just basically do a pump and dump. He would just say, "Oh, I was kidding. I wasn't really going to buy the stock." Or better yet, he would ask somebody in his office to spread a rumor that he was buying, and people will buy the rumor, sell the news, like we talked about earlier. So they would start buying because they heard that Trump was going to buy the company, and then Trump would make a bunch of money and he would sell the stock right when it got at its peak. I think that stuff should be illegal, but it wasn't, and he made a lot of money that way. Let's see, what are your thoughts about investing in financial technology ETFs? I think fintech is big. I think it's a great way to invest. I encourage you to do that. Will the Zoom be recorded? Yeah. If you go to the blackstockmarketprogram.com, that's where all the recordings are. We record every single thing that we do. THE, theblackstockmarketprogram.com. So just log in and you can have access to every single training we've done. We've probably done about 500 by now, probably more than that. I'm gonna guess. I don't know. I gotta count one day, but maybe it's more than five, six, 700. I don't know. But we've been doing this for years, so there's a lot of stuff in there. You'll never run out of material. Let's see. What would be the best steps to start a portfolio from scratch? I think mutual funds and ETFs are the easiest way to go. If you text the word stock to 87948, text stock to 87948, I will send you the Black Wealth Master Plan, the $5 a day plan that every family can use to build wealth in less than a generation. So just text stock to 87948, or you can also go to blackwealthmasterplan.com, and that's a good way to get started. We've shown a lot of people how to buy their first share of stock, so hopefully that will help you. Let's see here. Ginger, please explain the Robinhood glitch. Yeah, the Robinhood glitch wasn't really a glitch. It was where I believe that they engaged in deliberate market manipulation by basically stopping people's ability to sell a certain company's stock. So they could wait, sorry, scratch that. Sorry, they stopped the ability to buy. I meant to say buy, not sell. So what happened was get with I think it was GameStop, if I'm not mistaken. They're connected to I believe they're connected to Citadel. I don't know the names of all the players exactly, but I'm so if I get one wrong, forgive me. But I believe Citadel, run by the biggest hedge fund guy, Ken something. I don't have his last name. But this guy, I mean, this guy literally makes over $1 billion a year personally. Like he makes it like he makes 100,000 times more money than your favorite rapper or basketball player. And anyway, this company had short sold, I believe it was GameStop or AMC or something like that. And the problem is that this company was in business with Robinhood. And what happened was that all of the what I forgot what the term was in the pandemic. I'm losing all the terms now. All those people that were just jumping in and buying, what they call them, game stompers or something like that. Anyway, all these people online that were basically buying this stock and trying to do these quick trades and make all this money, they were trying to punish the short sellers. So they were trying to buy more and more and more shares to keep pushing the price up so that the short sellers would feel the pain. Because the short seller, what they've done is they sell the stock and they try to buy it back when the price drops. So they try to buy it when it's cheaper. So there are people who were trying to push the price up so that you would end up doing the opposite of what, yeah, let's call them apes. Thank you, Khaleesi. I don't know why I don't remember all the names of all these people. This is all during the pandemic. But anyway, so the way you hurt a short seller is you force them to do the very thing that will lose you money every time, which is instead of buy low, sell high, you get them to buy high, sell low, right? So they're buying here and they sell here and then they have to buy back later on and the price goes way up. So you're selling something for, 10 and then you have to buy it for 30, right? You're going to lose a lot of money. So Citadel was losing billions of dollars because the stock price kept going up, 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 up. So here's what Robinhood did. Robinhood did something that I thought was highly unethical, that really should have been criminal. It was unbelievable that they did this. They basically rigged the system where they said, um, nobody on this platform can buy the stock. Oh, but you can sell it if you want to. So what they did was they put downward pressure on the stock, and they claimed that it was because there was so much trading and there was a glitch and they had a margin call. Just whatever they were doing. They claim BS. You can go look it up. I don't remember all the details, but I remember when I read it, I was pissed. I was so mad. I said I can't believe that they're doing this. I can't believe that they're not getting punished and sent to jail for this. So because what it did was it allowed the short sellers to get out of their position while the price was still low. Whereas if they let people just buy the way they wanted to, that price would have kept going up and they would have kept losing money. And so what a lot of people accuse Robinhood of doing is collaborating, colluding with Citadel, who was their major business partner. That they're making a ton of money by selling order flow to them. And now I'm not going to explain what all that means exactly, but there was basically, if you want to know if I thought the fix was in, hell yes, the fix was in 100%. It was infuriating for me. It was shocking to me. That nobody got punished for this, and they were able to say, "Oh, it was an accident. We just didn't know what was going. We just don't know." And people asked them a lot of hard questions and kind of beat them up on it for a little while, but then they just kind of moved on. So that's why you have to be careful, right? Because if you want to know if I think the game is rigged, it's absolutely 100% rigged. But it doesn't mean you shouldn't play. It's like if you want to be a boxer, but boxing's rigged. But if you train hard and you're the next Mike Tyson, I think, and you don't mind getting hit in the head, I think it's okay to go be a boxer, right? Putting the brain damage part to the side. I don't want you to get hit in the head, but really, it's you know, because here's the thing. The greatest wealth generating mechanism on this freaking planet is the stock market. Like that is where the money gets made. Sometimes there are bad actors and all that. Just like with Bitcoin, there are a lot of bad actors in Bitcoin. Bitcoin is used heavily for money laundering, sex trafficking, all these terrible things that happen in our society. But I still invest in Bitcoin because I believe that as a commodity investment, it's going to do well. All the fundamentals point to Bitcoin going up over the next 5 years. And I believe that when we're having conversations 5 years from now, I want you to remind me to go back and look at this video and what I said today, because I'm willing to bet you that in 5 years, 39,000 will seem super cheap for Bitcoin. Like there'll be people that are buying Bitcoin for hundreds of thousands of dollars per coin that are going to say, man, I wish I could go back to 2024 and buy that Bitcoin for 39K. All right, so let's see. Samuel, does Stash work the same way as Robinhood to diversify funds? Stash is good. Stash is a good way to do it. They're all better than nothing for sure. Oh, I forgot your question, Dorothea. ASML Holdings. I'm sorry, forgive me. Chalk it up to me just being a weirdo. All right, so let me look up ASML Holdings because I don't want to disrespect Miss Dorothea. All right, so let's see here. ASML Holdings. What do I think about that stock? Okay, so let's look at okay, so it's a Nasdaq company. The stock price is very high. It's in the hundreds. Let's see, the last year it's gone up by 13%. Okay, okay, I see that. Um, it looks like similar in terms of similar companies. You got Taiwan Semiconductor, Nvidia. Okay, so it looks like they're in that whole chip game. Let me see. Let me click on this to see if I can learn more about this company. Uh, and let me pull up on my other app too, so I can just try to see if I can eyeball anything. It looks good so far. I mean, if you're a believer in investing in the chip space, it seems like this company is as good as any other. Um, they're the third biggest European stock from Nestle. Wow, that's a big company. Okay, so let's see here. It's gone up a little bit today. The analysts like it for the most part. Yeah, I wouldn't be mad at you for looking at it. Let's see, they engage in the development, production, marketing, sales, upgrading, and servicing of advanced semiconductor equipment systems. Uh, okay. Yeah. I mean, do I like it? Sure. They make money. It's a big company. Let me see, what's the market cap of this company? $300 billion company. So yeah, so you'll be aligning your wealth with a company that's doing pretty well. So maybe if you really want to play the game a certain way, maybe if the market has a bad week, buy more when the market's doing bad than you do when the market's doing well. Because what happens is that the market has a type of contagion where if there's some economic variable that goes bad, like unemployment numbers or inflation, the whole market will sink. But all the companies are different in terms of their ability to make money. So some of these big companies like ASML can really become great investments if you're able to buy them when they're relatively cheap. But don't wait until it gets cheaper. Like if you believe in the investment and you want to be in that business, I would look into something like dollar cost averaging. Just buy a certain amount every week. You can set auto deposit in your app, but also maybe looking into an ETF in semiconductors would allow for more diversification. Let's see. Would the JNK ETF be good to invest in for monthly dividends? JNK. Let's see here. JNK. That's the Bloomberg High Yield Bond ETF. Um, let's see here. It doesn't do much in terms of capital gains. Let's see. High yield bonds, a little bit, riskier than most. I'm looking at it tracks a market weighted index of highly liquid, high yield US dollar denominated corporate bonds. What's the dividend yield on this thing? Let me see here. The 30-day dividend yield is 7.35%. Okay. Seven, a little more less than 7.5% per year. Yeah, I think it's good for dividends. Absolutely. I don't hate it. Let's see here. Paula, I have a 457 supplemental savings fund and I want to diversify my own portfolio. How much should I put in large cap versus small cap versus international versus bonds? I believe they automatically put a minimum of 2% in bonds. Are there any resources I can reference for assistance? Yeah, okay. So Paula, They have a 60-40 ratio for stocks versus bonds, generally, but a lot of it depends on what age you are and what your risk tolerance is. Those are the two variables that matter the most, age and risk tolerance. Um, but there's no sort of one size fits all argument. I would say that all those things that you mentioned, maybe find some way to put some amount of money in all those four areas, large, small, international bonds. And also remember that you don't have to pick individual stocks. You can actually buy ETFs that represent large caps, ETFs that represent small caps. An ETF is basically an economic soup that blends that all together, and that might be a good place to start. And really diversification. I don't think it has to be super precise. Some people want to make it super precise. I don't think it has to be. I think it just means don't put all your eggs in one basket, and then just kind of have some awareness of which industries you tend to be more weighted toward. So if you have a preference toward tech and you have a few more extra tech stocks or whatever, just want to be aware of what those trade-offs are, that you're going to have a little more volatility than you might have otherwise. Also, remember to diversify outside the stock market. The stock market as a whole can, collapse and decline, stuff like that. So you may want to keep that in mind. Khaleesi says, can you explain stock replication? Yeah, stock replication is a strategy used for options where you basically buy a deep in the money call option, and it allows you to have the same effect as owning the stock, right? So it's almost like when in the movie Straight Outta Compton, when they didn't cast Ice Cube in the movie, but they cast Ice Cube's son, who looks identical to him. And so he wasn't Ice Cube, but he was very similar to Ice Cube in terms of DNA, because they look alike. So stock replication is where you're not buying the stock because maybe the stock costs too much money, but you're buying an option that moves a lot like the stock. And with options, they have something called delta that measures how the stock and the option move together. So a stock replication strategy is where you buy a high delta option that allows your stock to kind of move with it. If you're interested in options, you want to learn more. If you go to stockoptionsmasterclass.com, we have a whole masterclass. I did a whole stock options weekend. I'll do another one pretty soon too. But if you go to stockoptionsmasterclass.com, there's a whole training breakdown on options and option strategies, how options work, all that. I think options are really important to know when it comes to investing. Options, in my mind, are kind of like the seasoning on your portfolio. Just like with food, you want to put seasoning on the food to make it taste just right. Well, the same thing is true when it comes to investing. You want to sort of season your portfolio with with options as a way to kind of get it just the way you want it to get just the right amount of risk, stuff like that. So let's see here. Macaria Lewis agreeing says, I'm considering whether using my HSA for investing. Any thoughts we should know before using HSAs for investing? I don't know the specifics on using HSAs for investing. That's something I don't. Let's see, I'm not aware of the specific rules there. I know that there's probably there may be something there in terms of give me a second here. Uh, so I imagine there's probably something in terms of like a withdrawal penalty or something, and that's your health savings account. By the way, that's what HSA stands for. Let's see here. I'm looking here online. Um, so they basically say you can invest the same way you can use money from an IRA. Uh, but I'd be willing to bet you that there's a penalty or something for using your HSA for investing. So I would talk to a tax professional and find out what that penalty looks like. I don't see anything here, but anytime they allow you to grow money tax free that's used for a specific purpose, when you use the money for any purpose other than the purpose that you agreed on, there's usually some sort of penalty for doing that. Like the 529s are for college. So if you don't use it for college, it's still your money, but you're going to pay a penalty to the government. Let's see. I'm looking here. I don't see anything about penalties though. That's the thing. But I'd be shocked if there wasn't some sort of penalty. However, if the money's sitting in your HSA and you're still going to use it for health related services, then there's probably some mechanism. If you talk to the provider of your HSA and you say, I'd like for my money to grow while it's sitting in there, and I want to put it in a brokerage account, but I'm not going to use it for anything else. then that's probably an option. I never really thought about that, to be honest with you. I know my wife doesn't use her HSA for any of that because she still works for her university, and they give them HSAs. Yeah, I don't see anything here that says it will be a problem to invest with it. I would talk to the provider and see what options they have. Let's see, Taquana. I had a Robinhood account for 3 years, but I never knew what I was doing. My questions: how do I set up my account for long-term buying? How do I apply $5 a day? Okay, so on Robinhood, if you pick a stock that you want to buy and you want to buy shares of that company. So if I go in and I want to buy like IBM or something, let me see. Let me just grab a stock here. Okay, so if I hit buy and I pick an amount, um, let me see here. I'm gonna see what happens here. Okay, so inside the app, there should be something there that gives you the option of doing a recurring investment, and that's what you're looking for. I don't have it in front of me, but we can look that up for next time for sure. But generally speaking, that's what you want. Here we go. They have a whole section on the front page when you first log into Robinhood on your recurring investments, and there's a button that says Manage Investments. So if you hit that, you can create a recurring investment, and that's what you want to do, right? So to do the $5 a day plan, you would do some sort of recurring investment of approximately $35 a week. I really want to encourage you to do more if you can afford it. I think 50 or 100 is always better for sure as far as money, the growth of your money. And literally just set it and forget it. At that point, the less you think about the investments, the better off you are because you're just sort of off doing something else and letting your money grow without you getting nervous and worried about whether it went down up or down that day. And so I think that that's the method. That's the surefire, easiest, quickest, simplest method for every single family that does this to become wealthy. Every single family that does this, that if they literally just make one simple commitment, if they just say, we're going to take $50 a week, $100 a week, whatever we can afford, and we're going to put that in an S&P 500 index fund, SPY, Victor Oscar Oscar, SPY VOO, those are the two. And we're not going to touch that money. But we're going to make sure that $100 a week gets in that fund every single week. In 20 years, that money grows into about $300,000. In 30 years, it grows to approximately, give or take, between 600 and $800,000. So you're talking about having wealthy kids. Your kids are doing great. You tell them what you did for them, document that in your estate plan and all that, so they'll know that you love them. And then at that point, you've got a family that's an institution. You got a family that's wealthy. You've got kids that don't have to go through hell like everybody else. A lot of people go through financial hell because nobody prepares for them. Nobody makes a plan for them. Nobody saves for them. Nobody invests for them. Nobody leaves them a life insurance policy. That's not the way things are supposed to be done. You're not supposed to abandon children, but you're not supposed to traffic your children to corporations. Corporations are the biggest pimps in America. Corporations will steal not just your time and your money, they will steal your soul. And so the reason that we end up serving these corporations is because nobody has a plan for us because people think that it's uppity to talk about financial planning and investing and all that, and it infuriates me. It irritates me to no end. It's the craziest thing. It's an easy solution, but whatever reason, but I think the reason we don't do it is because it's so different from culture, right? It's so different from what you're kind of taught. And so if you want to know how I think, I'm an absolute skeptic. I don't trust the system to train you or to prepare you for the future. I don't think that's in their interest to do that. All right. So anyway, Taquana. Okay, you already asked about Robinhood. Okay, so that's how you can do the $5 a day plan. So don't be afraid. She says, I'm so new to investment, and all I know is what I've learned from your training the last 23 days. Let me tell you this, Taquana. Don't underestimate that. The stuff I teach is cutting edge stuff. You know, I've studied this stuff at a very high level. So spending 23 days with me, the day if you come to class every day, you're probably ahead of 80% of all people in this country. I kid you not. There is at least a couple things I share with you guys every day that the majority of Americans do not know. I'm not bragging. This is just me just being honest about the superpower God gave me from all those years of work I put into this stuff. I was teaching college students 30 years ago, right? I just look young. I don't know if I look young. Maybe I look old. I have no idea. But seriously, I'm being 100% serious when I tell you that this is not common, easy, simple stuff. I mean it. And also, if you're bringing your kids and you're exposing your kids to these ideas, they will be absolute giants and beasts when it comes to economics. The grandkids will be ready, and that's what I just want for them. I want you and I want your kids to be safe and happy and good and capable. I hate seeing our people just scrambling and suffering and scared and getting our butts kicked, because a lot of this is very preventable and it frustrates me. I don't like it. So anyway, so don't underestimate what you know. You probably know more than most people now. So don't let your concern or your fear stop you from making a move. Just jump in. Um, Again, if you go into Robinhood, there's that little section. That says manage recurring investments. So you can go down there and just start a recurring investment and just do that $5 a day plan. Blackwealthmasterplan.com. That's where the master plan lives. Blackwealthmasterplan.com. Okay, so let's keep going. Lori, what made you decide that SGMT was not a long-term investment for you? You know what is a personal decision, Lori? It's sort of, generally speaking, when I tell you guys about a stock, I'm usually thinking like typically these are companies that I'm talking about for the next 3 to 5 years. But if a stock really takes off and does really well, sometimes I just say, I'll take my money, I'll take my profits and move on. Um, and part of the reason I took the profits was also because I had other things I wanted to invest in. I make most of my money by selling stock options. That's how I get my cash. That's how I pay credit card bills every week or whatever. And so a lot of my portfolio I took from some of the long-term stocks and I diverted it toward a portfolio I use just to sell options on. This changes the types of stocks I own. It changes how I manage the portfolio, things like that. And it's that simple, right? So it's a personal preference. And by the way, if you want to learn more about that stuff, we do stuff like that in the Prime program. You can go to drboyceprime.com if you want to take a look. drboyceprime.com. Feel free to take a look at that. Ginger, I heard that a lot of young people became millionaires during that time. Oh, I think if you're talking about the crash. Yeah, if you're talking about the crash of 07, 08, a lot of people became millionaires at that time. Every time there's a crash, somebody becomes a millionaire. Every time there's a crash, millionaires are created. Let's see, Rick Thompson. How do you get the $5 a day plan? Okay. Yeah, you go to blackwealthmasterplan.com. You can go to boycewatkins.com. It's right there. You can also text the word stock to 87948. If you text stock to 87948, I'll see you there as well. Where can I find the Julian Gordon real estate course? You know what, Philip? We still work with Julian, but that course is not open for enrollment right now. So there's no place to go for that right now. Now I am doing a real estate series right now at drboycerealestate.com. So if you want to learn more about real estate, we're bringing in real estate experts once every 2 weeks to talk to the students and do private trainings with the students. So if you'd like to go to drboycerealestate.com, it doesn't cost much and the first month is free. So feel free to take a look at that. What do you think about GOSS? GOSS. Okay, let's see here. Let me see. Let's look up Goss. I don't know what Goss is. I've never heard of that stock before. So let's see. GOSS. Ah, this is I already don't like it. It already feels creepy. Yeah, this stock's dropped 95% in the last year. I mean, if you want to buy some shares just in case, because half the analysts like the stock, so maybe it's a fallen angel that is waiting for its big break. So maybe it has some sort of clinical trial coming up that could lead to the price jumping up. But just be prepared to lose a lot of money if you invest in this company. But be prepared for the possibility you might make a lot of money, right? So this is not a stock I'd look at as something that is going to make you long-term money. I'd look at it as almost like rolling the dice. That's the thing about pharmaceutical companies. Some of the biggest gains I've ever had came from pharmaceutical companies, but they'll also break your heart. So never get addicted to the feeling of making that fast money because the things that happen with SGMT this week, that's not common. It doesn't happen that often. All right, so let's see. What's the least expensive stock to buy 100 shares in and start trading options? I don't know. Maybe you might look at Riot blockchain. That's probably less than $10. That costs you less than $1,000. Riot, RIOT. That might be one to look at. What are your thoughts on JTAI? JTAI, let's see here. JTAI. Jet.ai. Okay, let's see here. Ooh, buddy. Okay, this stock has been getting its butt kicked. They engage in the provision of artificial intelligence software development solutions. Okay. They're losing money. I wouldn't buy this stock personally, to be honest with you. Sometimes we get tempted to buy low cost stocks, but sometimes they have a low price for a reason. So just be careful about digging in the garbage to find a company. Not that this company is garbage, not to say that that what you're saying is wrong, but I didn't see anything there that got me excited about that stock. QQQ, yeah, that's a portfolio of Nasdaq companies. The biggest holdings in QQQ reign are companies like Apple, Microsoft, Amazon, Nvidia. Let me just tell you, let me just make this promise to you. If you were to buy $100 worth of QQQ per week and did that for your newborn baby, your child would never have to work for anybody for the rest of their life if you never sell their assets. So there we go. I hope that sounds like an endorsement. Have you heard of the book The Tao of Trading? No, I have not, Ginger. I have not. I'm gonna look it up. The Tao of Trading. The Tao of Trading. Tao. It's like TOT tot. The Tao of Trading. Um, is REIT ETFs a good stock to put money in? Are REIT ETFs good? Real estate investment trust? Yeah. Yeah, Tyrone. I think it's a good way. A lot of people think that to get into real estate, you got to go buy property. You don't. You can buy a real estate investment trust, which will give you the same effect. Anna, with $5 a day plan, what's the best way to set it up for 4 children? I would just not overcomplicate it. I would have everything in your name. Maybe eventually you get a trust, get like a revocable trust or something like that. Talk to a trust attorney though to make sure you get the right one. And literally just the reason you use the revocable trust might be to make sure that that money can be transferred without probate in case something happens to you, but you would control the asset. So you make yourself the beneficiary and the trustee and all this other stuff. And well, the beneficiary could be someone else, maybe that gets the money after you die or something like that. But you would be the grantor and the trustee. Actually, the trustee controls the trust. The grantor is the person who puts the assets in the trust. And I would do something like that and just put a certain amount just for all the kids. It's like cooking, right? Like if I'm cooking for 4 kids, I'm not gonna necessarily spread out and break apart each meal I'm cooking per se. I just might throw a whole bunch of food in the bucket and just cook it all and then make separate little plates when it's done, right? Split it up amongst them 4 ways. And I wouldn't even tell the kids about it. Just do it. And then when they get older, you become the bank, right? You know, assuming you live forever, I want you to live a long time. Control those assets and don't give all the money away. Don't just like dump a whole bunch of money on them at 20 years old because you're ruining them. It's absolutely terrible to just go give some 20-year-old $250,000. But if you're the bank and you're sitting on $250,000 that is there for them, then you can kind of, carefully decide when they should have access to those funds. Or maybe you just say, "Hey, I'm going to be the bank. If you run into a financial problem, you can come apply for a loan at the bank." That's what I do with my kids. I tell them, "You can come apply for a loan from the bank if you're credit worthy, if you have a an important situation that requires some support or whatever. I can be the bank. I'm the backup. I'm the bouncer, but I'm not the person that is a welfare office. I do not make myself a welfare office for the kids, but I do make myself a financial protector, right? So that's what I think you may want to consider. So, but good for you though. I think it's great you're doing it for your kids. If you give them financial literacy and do some investing, small amounts of investing for them when they're young, they're going to be so grateful. They're going to be so happy for you. Let's see here. Marie says, when you say SPY, are you buying the stock? If not, how would you place the order to buy the ETF? I'm talking about the ETF. There's an ETF, S&P 500 ETF with the ticker symbol SPY. So that might be one to look at. But there's a bunch of them you could do this with. Ginger, I was speaking about the Robinhood event after last year. Oh yeah, yeah, people made a ton of money. It was a massive wealth transfer. When Robinhood screwed all those little investors, there were some big boys that walked away with billions. It was really everything you believe about financial conspiracy theories that exist in this country were on full display when the Robinhood incident took place. Okay, so what I'm going to do is answer a couple more questions and then I'm going to have to bounce it out. Let's see here. What do you think about MNMD? MNMD, mind medicine. Okay. Um, yeah, maybe if you just want to have some shares just for fun in case this company turns around, maybe. But remember, this company's dropped 94% in the last 5 years. So and it's a young company. It's had a good 3 months though. It's gone up a lot in the last 3 months. That's interesting. So maybe there's something to it. So if you believe in the company, let's see, clinical stage biopharmaceutical company. Well, there might be potential there. I wouldn't put my kid's college fund in it, but if you want to throw some money in there just in case, so you can be there in case it goes up or you have a reason to believe in that industry or that company, why not? Let's see here. Are you going to offer skilled trade school? Yeah, we're making partnerships right now to do that. We just have to sort of figure out some things from an administrative and financial standpoint with the Black Business School. I'm not gonna lie, it is tough trying to build an institution. It's a lot of work. I have a great team that helps me a lot, but sometimes you don't have as much money as you want to have to do the things you want to do. I wish I had like $1 billion budget or at least 10, $20 million a year to really go out here and get it done. But we don't have that. And so we make do with what we have. But I personally think that we are better with our tiny budget than most universities are. There's not a lot of universities where you're going to learn powernomics principles and principles of ownership and some of the things that we talk about. So we're really good. I'm very proud of our team and proud of what we're doing at the Black Business School. And I'm very proud of you for ending generational curses and making the decisions that are going to make your family better. So keep moving, keep investing, don't give up, don't slow down, don't listen to any naysayers. Just do your thing. You got this. It's going to make a difference, I promise. And we're going to build a better future for our kids. All right. So anyway, guys, behind me you see my book, The 10 Commandments of Black Economic Power. It has a book. There's also flashcards if you want to teach the concepts to your kids, and there's a workbook that goes with it as well. So if you go to drboycebooks.com, you can take a look there, drboycebooks.com. Also, if you haven't done this yet, you can text the word stock to 87948, and I'll send you profit alerts periodically of stocks I like. So just text stock to 87948. So have a good day, everybody. God bless you, and thank you for hanging out with me. And